Our next presenter is Charles Funk, CEO of Heliostar Metals Limited. Charles, go ahead with your presentation, please.
Perfect. Thank you very much for having me. It's a pleasure to be in Stockholm and to present the progress we're making as Heliostar Metals. Heliostar has always wanted to be a producer, and we want to be one of the most rapidly growing producers in our space. And so the reason that gold production is so powerful at the moment is the margin expansion that you're seeing. And I think every investor or potential new investor to the space is starting to see some of the charts that are showing the profitability of mining companies like ourselves. And for us, we've got a new slide that we only made a couple of months ago, but we're already $500 below the spot gold price. That shows that at our La Colorada mine, what that cash flow, what that profit is being driven in our production profile and what that means for our ability to grow. If you think of where you should be deploying your capital through this cycle, I think there's a unique opportunity for companies in Heliostar's space. The big producers will be the same company before and afterwards when the margin contracts into the future, having made a lot of money and paid large dividends. The developers will still have to have given up a lot of their company to bring new production online. The sweet spot is in growing producers, where the cash flow that companies like Heliostar are generating can build and bring online new production so that we exit this incredible cycle of fundamentally bigger and better company, but we haven't had to dilute significantly to get there. And that's at the heart of the business proposition that I'll present for Heliostar today. As I said, our ambition is to be a 500,000 ounce a year producer. We think there's a sweet spot, and we've been targeting that for a number of years. To be fair, that was a fairly unpopular position over the last couple of years to be in. But what that's done for us is build a really deep pipeline of projects that we're able to try significantly in significantly cheaper price environments, that we're being able to maximize the cash flow from, and therefore significantly increase shareholder value from today. We've got two operating mines in Mexico, our La Colorada and San Agustín mines. We restarted La Colorada at the beginning of this year. We're about to restart production, having received an open pit expansion permit in the middle of this year at our San Agustín mine. And our ambition is to build as much cash flow as we can over the next 2 years to bring online Ana Paula. And that's the really step-changing quality for us as a company. You can see the spread of our assets here across Mexico. We have just under 500,000 ounces of reserves, over 3 million ounces in M&I resources, with another 2.9 that are currently historic that we look forward to being able to add together with an updated study this quarter at our Cerro de Gallo project. It's a deep portfolio of development projects being funded from cash flow from our operating mines. I think this slide goes to the heart of our value proposition. Today, Heliostar is producing 30,000 to 40,000 ounces of gold this year. Our Q2 all-in sustaining cost was less than $1,600 an ounce. So they are small, very profitable gold mines. We think we can increase our production next year into the year after, but the real step change comes when Ana Paula comes into production in 2028. We think we can be producing between 150 and 200,000 ounces of gold at lowest quartile corporate all-in sustaining costs. Right now, you can't find a company that meets that profile under a $2 billion market cap. That implies a 4 to 5x return on Heliostar today if we're able to deliver that goal. And the kicker is, we think we can get there with little to no equity dilution. We think that comes from generating between $100 and $150 million in cash flow in 26 and 27, as well as a project financing facility for the capex that we require for Ana Paula. So we don't just think our market cap can grow, we think we have the opportunity for true per share performance as we build and become a quality mid-tier gold producer from 2028 onwards. And then once we've built Ana Paula, we intend to build the Cerro de Gallo behind that. So organically, we can get to 300,000 ounces without any M&A risk of our ultimate goal of being a 500 million ounce a year producer. In terms of corporate structure, at the beginning of October, we had just under between 450 and 500 million Canadian market cap. We finished Q2 with 30 million US cash in the bank, and we expect to be around that mark when we report this updating quarter. We've got no debt. We've got some really supportive shareholders. Eric Sprott, Steve Land at Franklin Templeton, Adrian Day at Europac are our biggest shareholders. They own the bulk of the $9 million US of warrants that we're going to have coming in over the next 8 months. We've got a very strong balance sheet, and we're continuing to add to it as we produce gold every month from our operating mines. Our team has deep, diverse experience in Mexico, covering myself with a background in large companies in Vizsla Silver, our CFO, Vitalina Lysoon from Gatos Silver. Greg Bush has built mines in Mexico. He's operated mines near Ana Paula, long operating history. Sam Anderson, deep experience from Newmont. The team's broader experience, including companies like First Majestic, Guanajuato Silver. We're very comfortable that we've put the team together to deliver the promises that we're making today. Our guidance for the year is 30 to 40,000 ounces of gold at around a $2,000 all-in sustaining cost. We're on track to meet that guidance. And if you look at our Q2 numbers, which were forecast to be our weakest quarter, we still generated $40 million of mine operating earnings at a very low all-in sustaining cost. We think Q3 should be an improvement on those numbers. We're going to be low cost Q1, Q2, Q3 this year. We'll be high cost Q4 as we restart San Agustín, and then we'll return back to what I think is around an $1,800 all-in sustaining cost from our operating assets. So very significant free cash flow margin in this price environment and growing production with the restart of San Agustín. And so if we quickly look through those assets and see how we unlock, I think the reason our share price is performing is because we were a trust me story when we bought these assets. We thought there was an opportunity to unlock value, but we couldn't clearly say what it was. Now I stand here today saying we have a clear plan on our production growth from our assets. And that starts at La Colorada. You can see a good graphic here that I like to share. You see 3 pits in blue and stockpiles in gold. We've been able to produce from stockpiles. We plan to move to the Veta Madre pit and then the Creston pit in sequential production. We think we can use the cash flow from each one to move forward to the next one. And we're a little delayed, but we have an updated technical report coming out from La Colorada shortly that we think will show improved economics on the back of an extra 16,000 meters of drilling that we completed earlier this year at the project. So we think that's a potential improvement in the value proposition of Heliostar. If I skip ahead, now that we've bedded down production, we can move towards the upside at La Colorada. We think there's the potential for an extra 28,000 ounces of gold in a larger pit at Veta Madre, and we're about to do the confirmation drilling that would allow us to generate in the order of 30 million extra in cash flow should we build a larger pit. We've had some really high grades under the pits, between 5 and 10 meters at 5 to 25 grams per ton gold. I personally believe there's a lot of upside underneath the pits at La Colorada. And then to the exploration upside, these assets have been in production for a while, but it blows me away how much upside is in the La Colorada district. We think we can grow well beyond the 6.5-year mine life, and now that we've bedded down production, we're really excited to look to that growth at the asset. At our San Agustín mine in Durango, and I'll jump ahead because I love this graphic, in late July, we got all the permissions and permits that we needed to restart production. We're going to do that in Q4 this year. The work's underway at the moment. It adds 14 months of mine life, which is relatively short, but at $3,000 gold, that's 40 million in cash flow, maybe closer to 70 at this spot price. It's incredible how much cash flow we can generate out of the San Agustín mine this year into early 27. And then that now gives us the confidence to reinvest in San Agustín as an asset. So you'll see drilling here looking to grow that oxide footprint. And it's these two assets that we're maximizing the cash flow from to build Ana Paula. And Ana Paula is really that crown jewel that we're moving towards. It's a project that's sold for over $100 million, that's had $100 million spent on it, that is permitted for an open pit mine. But we pivoted because we believe we can make more money as an underground project. And the reason that we think we can make more money as an underground project is shown really well on this graphic. There's a high-grade panel at the center of the deposit, 700,000 ounces of M&I, another 450 of inferred. that generates some truly incredible results. Just this week, we drilled 88 metres at 8.8 grams per tonne in the centre of the Ana Paula deposit. We're in the middle of a 15,000 metre drill program that's looking to convert those inferred ounces up into M&I. And we're looking in the feasibility study that we're working on for late next year, very early 27, to support a 10-year mine life at around 100,000 ounces a year. We are, however, just starting to disclose for the first time, we're going to put a PEA out this quarter on Ana Paula. We want to be able to demonstrate the economics that we see for the asset. And I think it's going to be quite exciting to put those out. The work that we've done is indicative of a CapEx in the order of around $300 million. But what really separates Ana Paula as a deposit is it's 60 metres wide, going 5 grams per tonne. That means very little development for a lot of gold, and we think we can be in and around $1,000 all-in sustaining costs. This would be one of the most profitable, lowest cost mines in production, should we be able to meet those metrics. We've completed the flow sheet. Part of Ana Paula has really good recovery, part of Ana Paula has poor recovery. We're going to design a mill that gets recovery from both. We're going to show the economics of that in this upcoming PEA. We're going to convert those resources across. We're going to modify the permit from open pit to underground. We expect to commence construction in early 27 for commercial production in 2028. But the advantage of generating cash flow is how we can de-risk the asset. Next year, we plan to complete this decline that you can see on the slide here to be in at the underneath of the ore body. That sets us up and de-risks us for production, but it also gives us a platform for the deeper drilling. At Ana Paula, we've drilled some lovely deep results, there has been some lovely deep results drilled, 13 metres at 29 grams, 40 metres at 6. The exploration potential at Ana Paula is very high, in my opinion. We're geologically more shallow than our neighbouring deposits. And in the Guerrero gold belt, you get an intrusion, you get a contact skarn, a reaction that drops out gold right around the margins of the intrusion. And here you can see, when you stand on Ana Paula, a 15 and a 20 million ounce deposit within the view of our deposit. Ana Paula is further higher up in the geological column, and those fluids have escaped higher. So we think there's a lot of potential deeper, and we're really excited to get that decline down next year and use that to de-risk production and to see whether we truly do have a monster gold deposit like our neighbours. The third of those studies that's coming out this quarter is Serra de Gaia. As I touched on, right now it's treated as historic for the simple reason that we took on a lot when we bought this portfolio and we didn't have the bandwidth to do everything. So it's going to be really enjoyable to put that study out. The historic study had just under 3 million ounces, over $200 million NPV at a $1,600 gold price. We're pretty excited to get that study out because we think we're not getting any value for what's going to be our next mine build after Ana Paula. And so that leads us to what our news flow is going to be. And we'll move away from this graphic, but I'd like to leave this graphic in because it shows you that we've done the things that we said we would since we bought the producing assets. And so we've been methodically ticking off and de-risking the production profile and now starting to look at NAV growth value. And the way I like to think of our news flow is on 3 levels. It's that quarter in, quarter out production demonstrating that the assets are generating cash flow. We're in a pretty significant spend phase. We're spending $9.5 million in the second half of this year at Ana Paula. We're spending $10 million to restart San Agustín. We're going to expand the leach pad at La Colorada, and we think we might bring forward one of the pits at La Colorada, the Veta Madre pit. So we're going to generate significant cash flow, and we're deploying that into the business. We think we'll be truly free cash flow generating in the second half of next year and using that money for Ana Paula. That's that baseline of performance of our assets. Then it's the big growth in value of the company. The La Colorada Tech Report, the Ana Paula PEA, and the Serra de Gaia PFS are all coming this quarter. And on top of that, 15 to 20,000 metres of drilling at Ana Paula, 10 to 15,000 metres at San Agustín, and we think we'll get to about 20,000 metres this year at La Colorada. It's base performance, it's growing the value of the company, it's the excitement of growing resources with the drill bit. If we do what we lay out as a company, we're going to be worth a lot more once we deliver the production growth. Thank you very much.
Thank you very much, Charles. I had some questions regarding your growth targets. They seem quite aggressive, but where do you see the specific near-term milestones going into 26, 27 that would validate your trajectory here for 2030?
Yeah, you're right. They are very aggressive growth targets. It's the nature of our company to be aggressive. We think we're conservative technically, but we're very aggressive in what we want to achieve as a business. High level is that we want to be 500,000 ounce a year producer. We think that's the sweet spot in terms of generating cash flow, becoming bigger but not being so big. And a number of us in Heliostar have worked for big companies. We think that's where we want to target to. I think how we get there is step by step. We came from very little. We weren't well known. We didn't have cheap access to capital, so we've had to prove ourselves step by step. I think the next big one comes from valuing the cash flow at San Agustín, having the first open pit mine expansion permit in Mexico since the last president, I think is a significant milestone for us. So I think it's that. I think it's demonstrating the economics for Ana Paula and then delivering Ana Paula in the short and medium term.
Mm-hmm. And the feasibility study for Ana Paula seems kind of critical here. What specific metrics are you looking at from the study that would make this project financeable and justify a construction decision in the end?
Yeah, so what's unique about Ana Paula is that width and grade. And so what we think that leads to is margin. We think this will be one of the highest quality in terms of margin projects coming online, which directly feeds to payback, which directly feeds to the financeability. So showing the PEA this quarter, delivering the FS late next year or early 27, if we can keep the capex around that number that we're talking around, we're targeting around 300 million. If we can deliver a $1,000 all-in sustaining cost, we think it's going to be a relatively straightforward project to finance. We've got proxies. Torex financed the Media Luna underground just 20 kilometres away from Ana Paula about 18 months ago. So there's direct comparisons of what and how you would finance Ana Paula. We think if we bring the cash flow to the table that we're proposing, the attractiveness of the margin of Ana Paula should make it relatively straightforward to finance.
Yeah. And for investors who are a bit scared of dilution along the way, I mean, to get you to these aggressive goals?
I think that's our competitive advantage. I think we wanted to be a producer when the market was tough, when it wasn't valuing assets, so we didn't dilute a lot to achieve those assets. Now it seems a much more crowded space. Everyone's desperate for production. Everyone's buying either lower quality assets or paying more for higher quality assets. Yeah. So the fact that this gold price keeps moving the way it has, even $3,000 gold, we think is incredible with our portfolio. As we're able to stack, this cash flow, it brings more ounces online that maybe weren't profitable before, and we get paid more for those ounces. So to reiterate, we think we can bring Ana Paula online without any material dilution. Now, to be clear, we still reserve the right, should we able to add more production or grow resources, but we'll do everything we can to bring Ana Paula on with very little equity dilution. And I think that's what's going to separate us from our peers. Companies are going to grow in market cap. We want to grow on a per share basis.
Charles Funk, thank you very much for coming here and good luck going forward.
Thank you. Thank you very much for watching.